While there are other options such as trading trusts, businesses in New Zealand will generally use one of these three structures: sole trader, partnership, or an LLC, a limited liability company. So what's the difference, and which one is best suited for you? What are the main differences between the three business entities in New Zealand, and which best suits your new business venture? Let's have a look. Sole trader. Now this is exactly what it sounds like. A sole trader operates a business on their own. There is no formal business structure and everything is in their personal name. They can employ people, they can buy and they can sell, and they control, manage and own their own business. They are obviously entitled to all the profits, but because everything is done under the trader's name, they also become personally liable for all the business debts and taxes. Now there is no formal structure or approval needed, and most sole trader businesses can be established without any paperwork. It's common enough for a business to start as a sole trader and then move to a limited liability company structure as the business grows over time. Now each year the trader will be required to complete a tax return, file that with Inland Revenue, and pay income tax on the profits of the business. You can of course claim the usual business expenses to reduce that income tax. Yes, the trader is responsible for all business debts and taxes, but they keep all of the profits and they have full control over the business. The partnership. Partnerships are most commonly used for professional people such as lawyers, accountants and doctors. Partnerships are an effective way to share business operation and occupancy, rental costs, when several professionals work out of the same office. They may share the office, they may share some of the staff, and that's how they share their costs. Like the previous example, the sole trader, no registration is required to start a partnership, and a partnership doesn't pay business income tax. The income is divided amongst all the partners who then pay income tax on their own share. Now, depending on the structure, each partner is responsible for their own debts, tax payments, etc. Now, any partnership agreement should be in writing, as in some structures, partners can also be responsible for the other partner's business debts. So it certainly ensures that you need to fully understand any partnership arrangement before you start trading. At the end of the financial year, the partnership must complete a tax return, and then each partner needs to complete an individual tax return as well. The LLC, or Limited Liability Company. The company is New Zealand's most successful and most popular business structure. An LLC can give others, suppliers, customers, etc., confidence in the business, as the rules under which an LLC operates provide a framework between investors, shareholders, directors, and creditors. Now this gives customers, investors, suppliers and lenders a clear picture of who they are dealing with. A company is a formal and legal entity separate from shareholders, directors or owners. As the name would indicate, the individual shareholder's liability is limited to the percentage of their share of ownership of the company. But just bear in mind that this isn't a license to rip people off. This limitation of liability would not apply if the company was deemed to be trading recklessly or trading while insolvent. In that case, directors would still be liable for the debts. An LLC is a separate legal trading entity, and as such, they'll file an annual tax return to Inland Revenue. The company can obviously deduct trading expenses from its income and will pay tax on its profits. If a company's expenses are more than its income, it can make a loss and obviously won't pay any tax. If the company distributes profits to its shareholders, shareholders will then have to pay income tax on the dividend, but may also get tax credits back from that same company to help offset those payments. Shareholder agreements. Irrespective of which entity you use, if there is more than one of you, I cannot stress the importance of having a shareholders or partnership agreement in writing and signed by all parties. It should set out how the business will trade, the roles and expectations of the shareholders or partners, and most importantly, how that entity will be dissolved or valued. Now, will it be closed down, sold, partnership, shareholder buyout? It should detail the process for each of these things and should be prepared by a lawyer experienced in these matters. Now, if you'd like me to put you in touch with a good business and contracts lawyers, let me know in the comments down below. I hope that helps you to better understand the various entities and structures available to you when you start a business. Let me know which one you'll choose. Hey, thanks again for watching. If you want to know more about starting a business, maybe want tips on successfully improving your business, start right now, hit that subscribe button. If you like the video, give it a thumbs up, maybe leave a comment or ask a question down below. I read and reply to every comment and I would love to hear from you. Thanks very much for watching. See you again next time.